As a passive investor, you probably are wondering whether there are any fixed income and conservative exchange traded funds that you can easily pick to allow you to invest in the stock market without the hassle of having to rebalance your portfolio or having to worry too much about any cost associated with picking stocks or high risk associated with them. Well, this video is exactly for that, where we are looking at best fixed income and conservative all-in-one exchange traded funds for Canadians. For those of you who have been following our past videos, you recall that we recently posted two other videos whereby we talked about high growth all-in-one ETFs as well as balanced all-in-one ETFs. This video, the focus is on the other two categories of all-in-one exchange traded funds. In other words, our fixed income as well as conservative. The fixed income or income focused funds produce regular income fund and little to modest long-term capital growth. They typically have a much higher proportion of bond exchange traded funds versus a much lower exposure to stock or equities. In other words, this can be as high as 90 to 100% bond or fixed income exposure. Similarly, for conservative focused funds, they provide a combination of income and modest long-term capital growth. Here, the difference is that there's a little bit more proportion of exposure to ETFs compared to the fixed income. Here, you have around 50 to 60% exposure to bonds versus 40 to about 30% or 50% exposure to the equities. With that out of the way, let us move on and take a look at all-in-one ETFs, the best all-in-one ETFs focused on fixed income and conservative approach to investing, allowing you to have that automatic rebalancing and more diversification easily. Here is the list. On top of our list, we have XINC or iShares Core Income Balanced ETF portfolio. It holds 8 BlackRock ETFs and gives you exposure to 20% equities versus 80% bonds. The inception date for XINC was 7th of August 2019. We have listed all these ETFs here based on their management expense ratio or MER. You see on top of the list, we have the one with the lowest fee, and at the bottom of the list, we have the one with the highest fee. But stay tuned, because one of the findings here that I'm going to be sharing with you would probably surprise you, and one that I'm personally quite keen on, perhaps not right away, but for my retirement years. Let's get into it. As you see for XINC, the 1-year return is only a very modest 2.58%. In fact, it's considered to be very, very low return in my book. In fact, I don't think it actually even beats the inflation. So it's something for you to be mindful of. And if you remember from our past videos whereby we talked about more about high growth as well as balanced all-in-one ETFs, you'd see here how remarkably the difference is between the stock and kind of ETF returns. The 1-year return of only about 2.5% compared to, say, the likes of 11 to 12% is a massive difference. Really, what it boils down to is the fact that here you get a lot more exposure to bonds, which are less risky, and as a result, less riskier investments, but also means less reward in this case. It could also mean, of course, less volatility in certain years, but at the same time, your returns are definitely going to be suffering. It could be ideal maybe for those who are already in their retirement years and that require that kind of solid, less volatile investment. But if you're younger and in your early, investing years, personally, for my own risk tolerance, I'm going to be staying away from fixed income or conservative all-in-one ETFs for the time being. In terms of assets under management, AUM, for XINC is fairly kind of a newer ETF, as we talked about, given its inception, and it has only 41 million assets under management. In terms of the distribution, though, which is almost like a dividend amount paid, but it's called distribution for ETFs, it has an annual yield of 1.88%, and the amount is paid on a quarterly basis. Next on our list, we have XCNS, another BlackRock iShares ETF. It's iShares Core Conservative Balanced ETF portfolio holding 8 BlackRock ETFs. It has the same inception date as XINC, but here you get a little bit more exposure to equities, 40% equities versus 60% bonds. And look at the type of difference that it has made in terms of the 1-year return. The 1-year return has jumped from 2.58% to now over 8%. So that extra exposure to equities really is making that difference here. Assets under management is $91 million for XCNS, and the distribution yield is 1.72%, which is paid to the investors on a quarterly basis, those distributions. Next on our list, we have Zcon, which has a similar fee of management expense ratio of 0.20%. It is BMO conservative ETF, holding 9 BMO ETFs, holding as well 40% exposure to equities and 60% exposure to bonds, similar to XCNS. The inception date here was 15th of February 2019. We have a higher distribution of 2.57% annually. The distributions are paid on a quarterly basis. Assets under management here is 46 million, and the one-year return is at 6.47%. Next on our list, we have two Vanguard ETFs. First, we have VCIP, or Vanguard Conservative Income ETF portfolio, which holds actually 7 Vanguard ETFs. It gives you 20% exposure to equities versus 80% bonds, with an inception date of 29 of January of 2019. The distribution yield here is 1.86% annually, and the assets under management for VCIP is at $221 million. Management expense ratio is slightly higher than the other ones that we've reviewed so far. It's at 0.24%. What that means for investors, in simple terms, is that if you invest $10,000, just as an example, in 1 year, you would be paying $24 in fees for management expense ratio for VCIP. And looking at the 1-year return for VCIP, it is showing to be at 2.26% return. And lastly, and this is one that really kind of had my attention. It's kind of, in my opinion, a unique one. It's called VRIF, or VRIF, which kind of reminds you of the fact of some of those ETFs or funds that intend to provide a kind of a solid income. What the notion of this ETF is, it seeks to yield 4% a year return. Here, they have about 50% exposure to equities, 50% bonds, but they are really making it in a way that you get almost that 4% a year return in terms of distribution, which, if you think about it, like, the 4% rule, or you retiring and getting back money from your investments, about 4% a year, and living on that, it kind of, I think, tries to mimic that and follow that analogy. Hence, it's quite something that stood out for me. And I was quite impressed actually with 1-year return, because here you have a bit more exposure to equities. You see, despite the fact that you're actually getting a very decent, almost 4% distribution, 3.89% currently, and it is paid on a monthly basis, which is perfect for many retirees. On top of that, the 1-year return is also showing to be 11.20%, which is decent, quite decent, I must say, for a fund that also does pay you close to 4% distribution. That's something for us to keep in mind. It's fairly new. It's about a year old. The inception was 9th of September 2020, and it's called Vanguard Retirement Income ETF portfolio. As I mentioned, it gives you 50% exposure to equities, 50% bonds, and it holds 8 different Vanguard ETFs as part of its holdings. Well, there you have it, folks. A quick look at the top 5 fixed income conservative all-in-one ETFs that might be of interest to you for passive investors. They're all in Canadian dollars and can be traded or bought or sold easily through major brokerage accounts. We do have some referral links for different brokerage accounts in our description of the video. Be sure to use them if you don't have an account currently and are interested to open up an account. There are different types of referrals, bonuses, including free stocks that you could take advantage of by using those links. And it really helps us as well with some support for this channel. Thank you. And before I forget, I wanted to remind you, we have made 2 other videos focused on more of a balanced all-in-one ETFs, as well as high growth all-in-one ETFs that could be of interest for you if perhaps you're into more of an aggressive, riskier, or perhaps more of a balanced investment approach when it comes to passive investing for Canadians. I hope you found this video beneficial and gained something of value from it. If you did, I really appreciate if you can give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, please don't forget to subscribe to Momentum channel. Here on Momentum Finance and Stock Investing channel, we talk all about investing in different avenues, including investing in the stock market, real estate, crypto, and other means of investing, as well as ways to reach safely financial freedom. Thank you, and we hope to see you next time.